Now we've got the management of the company also joining in with us. Alongside with us is Dr. Ankit Thakkar, MD and CEO of Jupiter Lifeline Hospitals. Very good afternoon, sir. I just want to start up with a general market question or a general business question for you. You've got 3 to 4 hospitals ramping up simultaneously. How should investors and how should we think about consolidated margins for you over the next few quarters? Do you expect somewhat of a dip in margins because of all of the activity in your capex and pipeline?
Good afternoon. So yes, we do have a few hospitals coming up. Dombivli has just launched last quarter. So that is in its infancy currently. It is, we have said that it should break even in the year 2 of operations. The remaining hospitals, the 3 that you're referring to, are currently under construction. The south of Pune is likely to start in 28. Then Mira Road in 29, and then BKC shortly thereafter. So in that sense, the company will not face margin pressure from multiple units at one point in time. Currently, when Dombivli is in its maturity phase, there are 3 hospitals to support it, Thane, Pune, and Indore. By the time Pune South gets launched, there will be a dip on account of Pune, but Dombivli will have stopped losing money by then. So it will have a cushion of 4, and then incrementally thereafter. So each new hospital is likely to have a lesser of a dent on the consolidated margins going forward.
So the timing of your rollout seems to be working out very well for you. Dr. Thakkar, hi, this is Snehi also joining in. Talk to us about BKC, because BKC has been positioned as a strategic brand leap for the company, but competition in that micro market is very intense as we see it. How does your BKC project stack up against peers who are equally aggressive in the same premium catchment?
So, Snehi, I have a different view. I think it is rather than competitive, I think it is an area of vacuum. If you really draw out the map of Mumbai and plot high quality organized healthcare providers, you will find a huge supply gap. So our internal view is it is more of an area of vacuum rather than area of intense competition. And in that sense, I think we will be able to provide the cover to the healthcare needs of the community.
So you've stayed, moving on your Dombivli guidance, you've stayed fairly guarded on providing any ramp-up guidance. So is there any way we can get you to give us some more color on how occupancy and revenue are trending there? And what's the targeted timeline to EBITDA breakeven?
So I've consistently said year 2 EBITDA breakeven is what we would expect from all new hospitals that are coming up, including Dombivli. And on that front, I think we are not looking at any negative surprises. We also said the first year of operations, you are likely to lose money on an average of 2 to 3 crores a month is what we had anticipated. And again, I don't expect too many negative surprises on that front.
Okay, and Dr. Thakkar, on the ARPOP front, how are you seeing the operating metrics shaping up over there in the next year or two? Can you give us a sense of trajectory and what could be driving it? Could it be pricing? Would it be case mix, your payer mix, or both?
Absolutely. So it is both. Pricing predominantly is market linked and it only grows in line with inflation. So there isn't too much of a lever in pricing as far as we are concerned. Case mix, of course, does contribute to improved margins and improved ARPOPs as well. As you know, more tertiary and quaternary services are provided in newer hospitals, the ARPOP tends to inch upwards. So Indore Hospital, for example, even now has the lever of case mix available for itself to improve the ARPOPs a little bit. Dombivli, of course, is in its infancy. So case mix will continue to be a kicker for the next few years to improve the ARPOP.
Right. But with so much in the pipeline right now, How much of your FY27 growth do you expect to be like for like, meaning coming in from existing hospitals versus coming in from incremental contribution from the new capacity that is coming on stream for you?
Yes, so that's a good question, and essentially that is how we look at it because each hospital has to be seen in isolation when we analyze performance. Thane Hospital is pretty much matured, so it is only likely to grow in line with inflation. It does not have too many levers as we speak today. The Pune hospital has, besides inflation, one more lever of occupancy growth. We are in the high 60% currently, and it can go up to mid 70s. So next year or two, it has an additional occupancy improvement lever. And Indore, of course, has all three levers: pricing, inflation linked, occupancy, as well as case mix that I referred to earlier. So all the three existing hospitals will continue their growth journey in this financial year, besides Dombivli, which will start adding to some top line, if not the bottom line in this year.
Okay, we'll be watching out for that. Dr. Thakkar, lastly, you've always mentioned that you still continue to prefer to be asset heavy and the owned real estate model is something that you're preferring for now. Is that strategy still at play since a lot of your competition is scaling faster via an asset light or management contract type strategy? Are you still betting big on the owned and operated model?
Yes, I think as far as we are concerned, we like the asset heavy model. We think that if you have a long term horizon, especially in an inflationary heavy economy like India, it is much more prudent to invest in and own your assets. They perform much better over the life cycle than asset light models. That is our view. And currently, we believe that if we have high conviction on a location and potential, then we should go all in on it and capitalize on the full potential of that investment. Going forward, as the operating base increases, the speed of growth naturally picks up with more and more cash flow generating units. But of course, asset heavy cannot be as fast as asset light. In spite of that, we believe that it is the right way to go as far as our company is concerned.
All right, so still betting heavy on the asset heavy strategy for Jupiter Lifeline Hospitals. Dr. Thakkar, thank you so much for joining us in and giving us all of that color on your business.